Now in this video, I'm going to teach you how to prepare the investing activities part as well as financing activities part. So for investing activities part, you must know that investing activities is all about how much you have paid for new non-current asset. For example, for a new motor vehicles, for new land, or for a new office equipment. Okay. And then investing activities, under investing activities, you will also have something like proceeds. Proceeds is something like the money that you receive, okay, money received from selling off non-current assets. For example, I sell off my motor vehicle, I sell off my land, or I might sell off my office equipment. So investing activities is something to do with your non-current assets. So whenever you buy or sell non-current assets, you might need to pay money. You might receive money from selling of non-current assets, and everything need to be recorded in investing activities. So looking back at question 31, okay, we are only going to look at non-current assets part. So under your assets over here, you look for non-current assets like motor vehicles and accumulated depreciation. So as you can see that, okay, how to check whether this company have bought in new motor vehicles or not? Very simple. Normally the question won't tell you whether they buy or sell, okay? But if the question didn't say that they sell any motor vehicles, which means that the company didn't sell any motor vehicles during that year, okay? If you can see that your depreciation has increased by 1,000, okay? Depreciation has increased from 4,000 to 5,000. This is because if you look at your expenses, there is depreciation over here. There is depreciation of 1,000. So the increase in the accumulated depreciation is due to the expense over here. Okay, due to the expense over here. Okay, so if you look at your motor vehicle has increased from 30,000 to 51,000. So if you open up your motor vehicle at key accounts, motor vehicle, your BD will be 30,000, which is from the figure over here, and your CD will be 51,000. Okay, so for motor vehicles, your motor vehicles has increased from 30,000 to 51,000, which means you bought in new motor vehicle, okay, of 21,000. Okay, so on your debit side, the total will be 51,000. Hence, the credit side, it has to be 51,000 as well. So in order to make it 51,000, you need to have a bank account over here on your debit side, 21,000, which means that during the year, you have bought in new motor vehicle worth 21,000. So this figure over here, this account over here, you need to put it in your workings. Okay. So under statement, you would have cash flow from investing activities. Okay, since you have bought in new motor vehicles, it's supposed to be payments for motor vehicle, and the figure will be 51,000 minus 30,000. Or you can straight away take the figure from your workings over here. You can straight away take the figure from your workings, 21,000. Okay, so the figure here will be 21,000. I bought motor vehicle, which means I would have to spend money. Okay, I would have to spend money. So there is a cash outflow. So since this is a cash outflow, it has to be a negative figure. Okay. Hence, since there is no more non-current assets, there's only one non-current assets, which is motor vehicle. So since there is no more non-current assets, you can straight away sum up everything. So for under investing activities, you have net cash flow from investing activities worth 21,000. Okay. And lastly, now we are going to start with our financing activities. Okay, so under SOCF there are three activities. Number one will be operating, number two will be investing, and the last activities that we are going to discuss today is the financing activities. Okay, so under financing activities, you need to look at your non-current liability as well as your equity. Okay, because this is where we get our figures for financing activities. Okay, we have to get it from non-current liability, or we might need to use the information in your equity account. Okay, so if you look at the question, we scroll to the liabilities and equity part to find out our non-current liability as well as equity. So in this question, if you notice that there is a loan from bank over here, hold on, there's a loan from bank over here. Okay, there's a loan from bank over here, repayable in 2028. So this is basically a non-current liability. So loan from bank is a non-current liability. So these are the figures that we are going to look at. If you look at your loan from bank, your loan from bank has increased from 0 to 29,000. From 0 to 29,000. 0 to 29,000, which means that, you have borrowed more money because you owe the bank more now. Last time you owed them nothing, now you are owing them 29,700, which means that you have borrowed money from the bank. So if you borrowed money from the bank, money will come in to your company. So under your statement, you would have cash flow from financing activities, and the first thing that you have is loan from bank. So your loan from bank has increased from 0 to 29,700, which means you borrow money from the bank. So since you borrow money from the bank, your cash account will increase by 29,700. This is a positive figure because when I borrow money from the bank, bank gave me money. When bank gave me money, cash at bank goes up. Okay, so that's why this is a positive figure. So income tax payable, we have done this part over here. Now we look at your financing activities. If you notice that your share capital, we are looking at our equity section over here. Share capital, general reserve, and retained earnings are equity. So we are looking at these three accounts. So share capital remains the same for the year. Okay. Last year it was 28,100. This year it was the same, which means that there is no share issuance. So there's no changes in your share capital, meaning that there's no share issuance. So there's no money coming in or out from the company. So we can just ignore this. Okay. Now for general reserve, it has reduced from 3,100 to 1,300. Okay. So your general reserve has reduced from 3,100 to 1,300. Which means that you transfer money so your general reserve become lesser. That means you transfer money from general reserve to retained earnings. And you are transferring 3,100 minus 1,003, which equals to 1,800. Okay, so this 1,800, there's no cash inflow. That means there's no cash coming in or out the company, because this 1,008 is actually the money within the company, so we cannot record this 1,008. But this 1,008 later on we are going to record in our retained earnings account. Okay, so for retained earnings, okay, your retained earnings has increased from 1,004 to 5,004. So you need to reconstruct the T accounts for retained earnings just to find out how much dividends you have declared this year. Okay, to find out how much dividends you have declared and paid during the year. So same thing, retained earnings is a equity, so the BD will be on the credit side. So BD is 1,004, CD will be 5,004. Okay, so when I transfer money from retained earnings to from general reserve to retained earnings, your retained earnings will increase. So when your retained earnings increase, you will need to put it on the credit side. So there is a transfer from general reserve of 1,008. This is how we record our 1,008 that we have calculated just now. We have to calculate this 1,008. We have to put this 1,008 into your retained earnings account. Okay. Now the next one, you must know that your retained earnings, okay, your profit after tax, which is 10,500, profit after tax will actually increase your profit after tax will increase your retained earnings. Okay, so under retained earnings, credit side, you will have profit after tax, or you can write that profit or loss. Your profit after tax will be 10,500. Okay, now once you are done, you can start to find out how much dividends you have declared during the year. So 1,004 plus 1,008 plus 10,500, you will get 13,700 on the debit side, which means that on the credit side, so which means that on the debit side you must have 13,700 as well. So 13,700 minus 5,004 equals to 8,003. So this is the dividends that you declared during the year. Now, since in this question over here, there is no dividends payable. There's no dividends payable, means that all the dividends are declared during the year and it's paid. It's declared and paid. That's why I don't have dividends payable. That's why I don't owe people dividends payable, which means that this is the dividends that we have paid during the year. So since we have paid this dividend, okay, there will be a cash outflow. So under your financing activities, you will have dividends paid, and your dividends paid will be 8,003. Don't forget to put a bracket because this is a cash outflow, cash coming out from your company. Okay, so finally, find out your net cash flow from financing activities, which is 29,700 minus 8,300, which is equivalent to 21,400. Okay, so this is your net cash flow from financing activities. Okay, so the next thing that you are going to do is you need to find out how much is your net increase or decrease in cash held. Okay, so how to find the net increase or decrease is very simple. You are going to take the subtotal of each section. So basically you have three sections over here. Number one, you have financing activities. You have operating activities, investing activities, as well as financing activities. So you have these three activities over here. You are going to take the subtotal of each each section. For example, you're going to take the net cash flow from operating activities, which is 5,800. We are going to take the net cash flow from investing activities, which is 21,000, and we are going to take the net cash flow from financing activities, which is 21,400. So if you add these three up, you will get 5,800 minus 21,000 plus 21,400, which is equivalent to 6,200. Okay, so this 6,200 is a positive figure, so this will be a net increase in cash held. So you need to rub off the decrease or just strike off the decrease part. Okay, now once you are done, the next thing that you need to do is to find out the cash and cash equivalent at the start of the year, and you need to find the cash and cash equivalent at the end of the year. Okay, cash and cash equivalent at the start and cash and cash equivalent at the end. Okay, so for cash and cash equivalent, it equals to cash at bank, cash in hand, term deposit maturing within 3 months. It has to be within 3 months, and you have to minus off your bank overdraft. Okay, if you look at the question, you have cash at bank, but there's no term deposit, there's no cash in hand, there's no bank overdraft. So cash at bank is the only cash and cash equivalent. So you are going to take 17,800, and this will be your cash and cash equivalent at the start of the year. So cash and cash equivalent at the start will be 17,800. And the cash and cash equivalent at the end of the period will be 24,000. Okay, so this will be 24,000. Once you are done with this, you have done with the whole statement. So how to check whether your statement is correct or wrong, whether you have done it wrongly or not? There's a simple way of checking this, which is to look at the cash and cash equivalent at the start and cash equivalent at the end. So if you look at your cash and cash equivalent, so this part you can write it in your workings to check lah. Okay, so your cash and cash equivalent at the start is 17,800. At the end is 24,000. So you are going to take the start, you are going to take the end minus the start, which is equals to 24,000 minus 17,800. If you take the end minus the start, you will get 6,200 as well. And this 6,200 will be the same as your net increase in cash held. Okay, the changes in your cash and cash equivalent is 6,200. If you look at your net increase in cash held, which is also 6,200, these two will be the same. Okay, these two will be the same. If these two is the same, okay, which means that you have done your calculations correctly and you are done with the whole statement. Okay, so this is how you prepare your investing activities, financing activities, as well as how to close this statement. So in order to prepare the whole statement, you need to look at the previous video as well. You need to know how to prepare the operating activities, how to prepare the investing activities, how to prepare the investing activities, and how to prepare the financing activities. And not to forget how to close the statement, how to close the SOCF statement. Okay, so this is how you prepare your statement of cash flow. Okay, if you have any question, please don't hesitate to email me or you can see me for consultation. Thank you.